Welcome everyone to our virtual event today. My name is Ian Gomez and I lead customer programs at H2O.ai, and I'll be moderating today's session. Speaking today from the MarketAxess team is Julien Alexandre, co-head of research, Liz Brand, global cloud engineering manager, Li-Kang Chen, trading system and data lake manager, Rakesh Malpani, solutions architect, Quant development, and please ask your questions on slido.com #bonds. Also, the MarketAxess team is growing. Check out the careers page at the link I'm about to put in the chat. With that said, let's get started. Just to level set with the audience, I'm going to point this question to Julien. Can you explain what MarketAxess does and the service you provide to your clients?
Introduction to what MarketAxess is doing and the business that we are in, which is the bond market. And to start, I will preface this by saying that what people usually know about financial markets comes from the equity markets. And the bond markets are quite different from the equity markets, as you can see from this slide. The level of electronification is very different. 90% of trades are happening electronically in the equities market, whereas it's along the lines of 20 to 45% for the bond markets, Euro bonds, US high grade, US high yield, and lower for other sub parts of the market. And with electronification comes a greater volume, and that's why it's very important to have more liquidity, more volume, more electronification to make it easier for market participants to trade and find liquidity in those markets. So going back a little bit further on this topic of differences between the bond market and the stock market, here's the side-by-side comparison of the two, explaining the difference in electronification and how the market trading takes place between these two markets. So bonds are traded over the counter and stocks are on the centralized exchange. Centralization helps with electronification. You have more fragmentation in the bond market with 10 times more bonds in the US versus stocks. And even for the same company, and here I take the example of General Electric, GE, you have 300 plus bonds versus one stock to trade. So a lot of fragmentation here for a size that is actually a little bit bigger in the stock market in terms of outstanding asset value. So the turnover, because of that, and also because of other factors like the investor profile and investor goals when investing in those markets, so we see that is going to be low. When somebody invests in the bond market, they tend to buy and hold for longer periods of time than when they invest in the stock market with higher rebalance, more often rebalancing than in the stock market. And the share of this trading is therefore 3 times higher in the stock market than it is in the bond market. And that goes and provides a reason why pricing is challenging in the bond market. And pricing is really at the heart of financial markets. It allows you to trade. You need a price to do a trade. Allows you to build models to create a strategy to invest and predict the future returns and risk of your investment. So pricing is really at the heart of trading, and if it's difficult to find it and have access to precise pricing, that poses challenges to all the market participants. And that's actually how we engage with H2O, and I think we'll talk about that in a minute. And so a little bit more on MarketAxess. The protocol of choice to trade in the corporate bond markets and bond markets in general is a request for quotes. So liquidity takers, think about them as mutual funds, insurance companies, come to the market and request quotes from liquidity makers. Liquidity makers traditionally are going to be the big banks. And they provide a service of immediacy and of availability to trade, and they get compensated for the service by when they buy lower than when they sell, and that compensation is for immediacy and for the risk that the makers are taking for providing liquidity. And that request for quote, which is still the main way of trading these days, evolved tremendously over the last 20 years. It used to be only on voice. So as a liquidity taker, you would have to call all the liquidity makers that you know, and there is so much you can do because you have to call them one by one, and you got to go and fulfill your mandate of trading. So there is so many people that you can call for a request for quotes. So then MarketAxess came about 20 years ago and electronified that process by allowing now to do it electronically and submit a request for quotes and get, it's basically instead of calling many people different times, you just send a message and like a request electronically and you get prices back this way. And you have access to bigger leverage by doing that because more people can provide you with more quotes in a lesser amount of time. And that brings better transaction performance than the voice market. And then 10 years ago, we expanded that process into open trading. And open trading allows you to go beyond relationship that you have with a subset of market makers to having relationship with everybody, having relationship with more market makers, but also being able to transact with other takers. And now takers can become liquidity makers and have more option to trade by not just taking liquidity, but also providing liquidity in this market. And that's the stage that we were in until a few years ago. I mean, it's still going on, but the next step for the market is automation and arrival of algos. And that's where Composite Plus, the pricing algorithm that we have and that we worked closely with H2O on, is becoming central to that automation and arrival of algorithms. And so the algorithm takes in raw data, including very importantly market access proprietary data, which is like a big influence into the quality of the algorithm. And then we use that data to create Composite Plus. And then that Composite Plus, once created, is usable in different stages of the trading process. So price discovery, which is pre-trade, being able to know what the price of a bond is likely to be. Post-trade, you have analysis of the transaction cost and also analytics, including something that was very useful and successful during the financial crisis of March 2020, with estimation of transaction costs in the market that were multiplied by 6 in March 2020 versus February 2020 during the COVID crisis. But now it's not only available pre and post trade, it's also available during the trade for automation and arrival of algos with auto execution and auto responder. So you can execute more automatically with auto execution and do more trade with less time. And with auto responder, you can actually provide liquidity and not just be a price taker, but also be a price maker. And the service that MarketAxess is providing now goes from technology and platform to technology, platform, and data. And that's really the stage that we are in right now and how the market is evolving. And that electronification is helped by the platform that we have, but also by the data that we have now. And that's something that came with the work we've done with H2 over the last 5 years.
Awesome. Thank you, Julien. I know Composite Plus has won many awards. And can you tell us why Composite Plus is so successful, and how they show team and they show brought value to this product?
Sure. So thanks for that question. So two main reasons why Composite Plus is successful. The first one is the ability that we had to model the problem the right way, and that's where H2O was very helpful to us when we engaged 5 years ago with your expertise and your versatility in dealing with machine learning problems across many different sectors and many different applications. So being able to properly set the model and work on feature building and feature creation and so on was instrumental to the success of Composite Plus. And the second reason is the unique data that MarketAxess has through its trading platform. And really, it's a virtuous circle where we get liquidity on the platform and we're able to use the information we have access to from the platform and repackage it into Composite Plus, into a precise pricing algorithm that then makes its way back into the platform by helping with data, the new protocols, the new ways of trading that have been built over the last few years.
Awesome. Thank you, Julien. As you said, Composite Plus has been around for about 5 years. And I'm going to ask this to Rakesh. What do you think is the next generation of pricing products?
Well, for Composite Plus, especially the way it's scaled up in terms of the number of bonds and number of data points we can make prediction on, we had to make technological changes, adapt it to bring it to a point where we can not just make predictions at that scale, also publish it to that scale to all the clients and so on and so forth. Let me share my screen, probably a quick view of where our technology stack is today and how we are making it, taking it towards, making it even more higher volume, higher throughput. This is just a quick view of how Composite Plus total market is today. Looks like it's a high level architecture view. It doesn't have all the details on individual components and stuff, but we sort of have a cache and compute grid. We have ways to publish results. We have ways to do the calcs that we need to do on top of the predictions that are made. There are certain analytics that need to be run. Then there's model training and prediction and so on and so forth that goes on. So, many different components embedded here. Another quick slide I'll try to shift to talk about. We're gearing towards making a little bit more real-time training and real-time prediction model, real-time prediction on a broader scale. So this is work in progress. This is where we are kind of driving towards. But the idea is for us to come to a point where we can do more real-time training and predict at much higher scale, much higher volume, and kind of take that journey from there.
Awesome. Thank you, Rakesh, for walking through us the architecture. Let's transition the conversation into the cloud. And Liz, these are for you. What was MarketAxess's journey to move to the cloud?
Yeah, we originally started with we started with an idea that actually failed. We started with the concept of trying to create lab environments for people. The idea was based off of innovation. We wanted to have a location to use innovative tooling, and that tooling existed in the cloud. Even H2O, when you look at its best usage patterns, they're all cloud-based. So when we looked at cloud, we originally targeted how can we create environments that are focused on innovation? How can we do that dynamically and support our entire company? And this would allow people to experiment with new technologies and work with integrating them into our applications at a larger scale. So we attempted that process. Inevitably, it had some trouble, but actually it ended up being one of our greatest failure points because it created most of our AWS environments today. And it led us to a lot of what Rakesh is showing in terms of our ability to build large scale AI and ML-based products using H2O. So we hold true that innovation was the key driver behind cloud. But the three things that we really cared about most were around cost, because we could ability to scale our workloads, have things not running 24/7. We can spin up these models on demand and promote them and not have them consistently running when it's not necessary. So from an infrastructure standpoint, we gained a lot back in terms of cost. And then from a velocity standpoint, there were huge benefits on the table in terms of our interactions with our customers. We care about speed to market, and we wanted to be customer obsessed. And so our ability to have a feedback loop with our customers on what we're building, why we're building it, and specifically the changes that we're making as we're innovating quickly, was critical. And so we needed to find a way to release quickly, have this high velocity to our customers, obtain that feedback from them just as quickly, and then be able to act on it. And so those are really the main drivers. And, that's what cloud gives us today. And then what Rakesh has in H2O, that's the package.
Oh, that's awesome. And then regarding Composite Plus, how did you get to that place of expanding Composite Plus?
Well, I think it was natural. I think that we were at a point where we were starting to grow, and our usage was growing. And as you can see, like we won more awards recently. I think the market has respected us more for what we've done. And so we needed to make our solution stronger. And that, we weren't going to like stop with what we had and continue to ride it out. We wanted to continue to invest in it and build it out and make it better and continue to be the best. And so in order to do that, we wanted to scale more, right? We wanted to have, a faster pace to market still, right? Even faster. And we wanted to have access to more innovation in the cloud. And so I think that it was just a natural progression to unlock these benefits. And H2O and if you even take the example of what it runs on in the background, we talk about containers, right? Container technology as the back end of this is so much more robust and available to us in the cloud. And so we now have access to all these tools. It was just really a natural fit.
Awesome. And what are the benefits of the cloud in your product development process?
Yeah, velocity is everything. I think that when you look at just release cycles and CICD pipelines and how fast you're able to actually have an idea and then implement that, that's what winners are in the market, right? People who can actually get there faster. And I think that is the main driver behind a lot of what we do. I mean, cost is great, tools are great, but if we want to get to market fast, and that is the real driver behind the technology that we choose, and the relationships that we choose with vendors as well. So H2O is a great partner in that. It's a great partner in our cloud solutions, and our environment and the architecture choices we've made are based around that velocity.
Oh, that's awesome. Thank you, Liz. My next question will be to Li. How does the cloud give you more capacity to leverage your data?
Thanks, Ian. Yeah. So, I think MarketAxess has always been a data-driven fintech company, right? What the cloud allows us to do is to really accelerate that process, via the innovative tools that kind of mentioned by Liz and its elastic nature, right? So I'm going to give a couple maybe examples on top of what Liz mentioned, right? So just concrete projects that we've been building in the cloud, leveraging its capacity, right? The first one is a project that we have on the continuous UX improvement, right? We want to give our trader the most intuitive front end so that they can complete a workflow, right, in the shortest amount of time with the least amount of clicks, right? So with the ML products on top of our centralized data store in the cloud, the data science team now can basically extract the pattern, identify inefficiencies, right, with a full history of over 5 billion data points that we have, right? And that, by the way, that number is growing daily, right? And these findings are ultimately kind of forward to the product team for implementation, A/B testing, whatnot, and the output. Obviously the output of that loop goes back into our clickstream analysis, right? So all these highly iterative approach, as Liz mentioned, it's another great example of our continuous innovation. Another one we have is revolving around the CP+, right? CP+, I mean, Julien already mentioned, about kind of the de facto standard now for the pricing bonds, right? For pricing the bond. And we've been, we have been building a new trading protocol revolving around CP+ in the cloud called MidX, right? As we all know, MarketAxess is a electronic marketplace, right? We're always looking for ways to for our traders to transact efficiently, right? Since the inception of CP+, it has been participating in the trading workflow already, right? But with this new product, MidX, this is centering, revolving around CP plus price. It's in the middle of the execution, right? So, we want to build really a cloud native, cloud first kind of a trading app from ground up. First, obviously the infrastructure, everybody already know from the industry, being the cloud, a few clicks, you have a automation, and then the infrastructure is readily available, right? On top of that, it's the elasticity, right? The workload, and Liz mentioned a little bit on the cost as well. So, you only pay for what you need, right? And as the workload grows, demands higher, then it will elastically scale horizontally, scale out. So these are a couple examples that we have in the cloud for that.
Awesome, thank you, Lee. So we have a few questions popping up on Slido. So I'll just quickly share my screen here. 1 second. All right, so to the MarketAxess team, what is it like working at MarketAxess? Can you describe your day-to-day?
Yeah, I can take that one. I feel like that question should come with a disclaimer of which day-to-day between work from home and being in the office. This is definitely a mixed bag now. And when we were in the office, I think that day-to-day was people jumping around and constantly chattering. I think the greatest benefit of having desks and being around each other was you would overhear conversations. I mean, we're not like massive company, so people know each other really well. And so you'll be working on something, doing something, you'll just like hear something, and it'll kind of tick you, and you'll get up and say, hey, what do you do with that thing? And then conversations start to flow, and you start to join it, and then it's like an hour later and you've spiraled and whiteboarded something with somebody else. So that was always the really exciting thing about being here and being so close to people and overhearing things. That's the thing I miss the most when we're at work from home. But at the same time, work from home benefits with MarketAxess have been very similar, just from more of a ping standpoint. I think everyone feels really comfortable just pinging each other constantly, almost too much maybe. But we're very open and asking questions and bothering people, joining a meeting or dropping early, right? Being whatever's the most productive for us, but it's very, very communicative. So that's the work stuff. Obviously we have really fun happy hours, and our office is really nice. So I think we get those benefits when we're here too. Mm-hmm. That's another, work from home loss, but I definitely like the days where my hair isn't done as nicely when I'm at home. And I think everybody enjoys that a couple days a week too.
Oh, that's awesome. Yeah, you have great offices, by the way, in Hudson Yards to the audience. So they have a great view of that. Okay, so the next question, sorry, let me switch my screen. Hidden behind a bunch of screens. Give me 1 second. All right, to MarketAxess, what can you share of the trading market do you have? Sorry, that's not phrased correctly. And are your competitors also getting into AI?
I can take that one. Thank you, and thank you to whomever asked that question. So the market share that we have in the US high-grade market, so those are the bonds from US companies that have a high-grade rating, so they are considered safer than other companies. Our market share for that of the trading is 22%. And our competitors are also getting into AI. Yes, they are. They don't really have a choice, I would say. And what they're lacking in their AI journey is the data that we have on MarketAxess with our unique positioning, and the fact that from electronic trading market share, we're the leader. So nobody is able to have access to that data, and that really sets us apart in the AI journey that we're on now.
Awesome, thank you, Julien. Are those services which help time to market are cloud native or legacy migrated from on-prem? Also, what were the main hurdles in CICD besides infrastructure? Thanks.
Yeah, I think, in CICD, I think it's more dependencies across applications. I think the monolith to microservices is the most common statement that people make when they go through modernization. And that's because of, interdependencies and how the applications were built previously. That's the biggest challenge in terms of, the go-to-market in terms of speed, because you're on one version of your application, you're waiting for that everything else to catch up, and you have to test more across a broader application code base. There's just inherently more challenges in that. So that we had an opportunity when we saw our cloud strategy to shed some of those, or ways of working in our technology, and adopt more modern, microservices-based approach. And so we built differently. And the tool set for CICD did change. We needed to adopt a different branching strategy in order to promote a faster deployment, so that it would reach the environments and be tested faster, rather than like gathering many changes all together and then progressing them all at once. So we went down to smaller batch. And so that enabled us to move a lot faster, because that smaller piece of code would move and be less impactful, require less, organization around its entire change process.
Thank you, Liz. Just a friendly reminder to the audience that you could upvote your questions and like them if you want the team to answer them first. So the next question is, how does MarketAxess utilize machine learning approaches to support Composite Plus when market data is missing or liquidity is scarce?
Yeah, this is an excellent question. We have a tiered approach to do that, and some models are geared towards bonds with enough market data, and we have other models that are geared towards bonds with very low liquidity and sometimes no market data at all, bonds that haven't traded in years or sometimes even ever. They were issued and they're just sitting on people's account as a buy and hold strategies for those investors. So we're able to apply machine learning in different ways, depending on the market segment of the bond and also the liquidity profile of the bond and the market data availability for that bond.
Which ML models are used, supervised, unsupervised, and what are the main inputs into the model?
I can take that one. So we use both supervised and unsupervised models for as a function of the application, and we have both in production. For Composite Plus, the main model is a supervised GBM.
Okay.
And we also have an unsupervised autoencoder to catch outliers and bad data. We have other machine learning models using H2O for liquidity measurement. Those are usually supervised, same thing with the GBM, but we also have unsupervised with PCA. So we use everything as a function of the application.
Awesome, thanks, Julien. 2 questions. What is the interaction between Composite Plus and the H2O platform? And number 2, what are the price predictions coming out of the ML model being used for?
I can also take that one,
awesome,
if that's okay. So the question 1, I mean, we use H2O algorithms both on-prem and in the cloud. So we interact with it really on both infrastructures. And the price predictions coming out of the machine learning model are used for many different applications. So pre-trade, during the trade, and post-trade. Pre-trade is about price discovery and for the investment process and being able to make decisions as to what asset to invest in. That's before the trades happen and when all the planning and all the discovery goes on. For post-trade is when you analyze the trade that you've done and you look at your transaction cost. What was the quality of the execution you had, either on MarketAxess or even outside of MarketAxess, and analytics, where you really studied the evolution in the marketplace. one piece of analytics that's been very successful is the analysis of average liquidity costs for the bond market. And we compare 3 periods over the last 2 years, which are pre-crisis, during the COVID-19 crisis, and then post-crisis. And we're able to measure that in March 2020, the transaction costs were multiplied by 6 versus pre-crisis. And we're also able to compare now versus pre-crisis, and we actually see that the transaction costs are lower now by about 10 to 15% than they were pre-crisis. That's for post-trade and analytics. And then during the trade, so like Lee mentioned, we have a mid-X protocol for session matching at the CP plus level, C plus mid. So that's powering directly the trade. That's the most powerful application of Composite Plus, the most impactful one as well. And other algorithms like auto execution, so automation of execution of request for quotes, and auto responder, being able to not only be a taker, but also be a provider.
Thanks, Julien. And this is a great question just to kind of wrap it up. How do you see the AI market in FinServ evolving over the next 6 to 18 months? Players involved, benefits, challenges, and who the winners will be?
I think, I mean, maybe a couple of us want to answer this one, but I think the thing that you've heard from a theme from across all of us has been that we're customer obsessed, right? We want to be customer first mindset. So the market is going to evolve, and financial services is moving more technology based. I think we had a benefit because we were always a tech first company. So we moved with technology, and financial services is now starting to move towards a technology first organization across the board. And I think that we have that leg up right now. And what's really going to drive our future success is the fact that we're listening to our customers. I mean, Lee said it, we've all said it, but we listen to the demand that we're getting, and we want to be able to respond quickly. And we're investing in our technology and things like CICD, right? And down to every last area that we can, so that we can move quickly and keep that feedback loop and continue to release and reach our customers quickly. So the winners are always going to be based on who can reach your clients and actually listen to them. And I think that that's exactly what we plan to do. And, you know, we've been winning so far, and we plan to continue to do so.
Awesome, thank you. It's like a show, we're customer obsessed as well. So we really appreciate the partnership with MarketAxess. Probably take one more question. I see one that came up. Let's just wait for 1 second for it to load. Actually, we'll just wrap up. Thank you so much for our community partners, customers, and team for joining today. Quick reminder, the MarketAxess team is growing, so is H2O team. Check out our careers page. Thanks again to Julien, Liz, Rakesh, and Lee for being part of our panel today. We'll be sending out the recording to you all the next few days, and check out a blog that will come out that will recap this session. Thanks again for joining, everyone. Have a great day. Bye-bye.
Thank you. Bye.
Thank you.
Thank you very much.